You have no investors, no rich family, no giant bank account. You have a job, a laptop, and a small idea you work on after everyone else goes home. At first, the goal is embarrassingly small. Make your first $100, then $1,000, then enough to cover 1 month of rent. But 20 years from now, the little company you're building at night will sit underneath a structure that controls 20 businesses worth roughly $500 million. And the strangest part is this: you will not build most of them. You will buy them. You will not run most of them. Other people will. And you will never need $500 million in cash to get there. But before any of that happens, you have to survive level 1. Your first business is tiny. You answer every email. You make every sale. You send every invoice. When a customer calls at 9:47 at night, you answer. When something breaks, you fix it. When nobody buys, you panic. Then 1 month, the business makes more than your paycheck. You stare at the number longer than you should. For the first time, money came in because you owned something, not because someone paid you for another hour of your life. So you quit the job. It feels like freedom. It isn't. The business grows, so do the problems. You hire your first employee, then 3 more. Revenue climbs. Your calendar gets worse. One morning, you realize you have built a company that can pay you well, but it still cannot function without you. You thought becoming the owner meant escaping the job. You accidentally built yourself a harder one. From the outside, you look successful. The company has employees. Customers know the name. Your friends assume you have figured it out. But your phone tells a different story. A supplier is late. An employee is sick. A customer wants a refund. Your biggest client wants to renegotiate. Every problem eventually travels upward until it reaches you. Then you meet an owner who wants out. His company is boring, profitable, 15 employees, customers who have been paying for years. He spent decades building it, and he wants to sell. That night, one question keeps you awake. Why spend another 5 years building a second company from zero if you can buy one that already works? You don't buy it immediately. First, you change the structure above your own business. You create a holding company. It doesn't have customers. It doesn't have a storefront. It barely has a reason to exist on its own, but it owns your operating company. Then the second business is placed underneath it too. Yesterday, you owned a business. Today, you own a company that owns businesses. It looks like paperwork. It feels like a small change. It changes the direction of your life. Because your question is no longer, how big can I make this company? Now the question is, what can this company own next? The first acquisition is terrifying. You use some money you've saved. Financing covers another part. The seller agrees to wait for part of his money. For months, you expect something to explode. But the second company keeps doing what it did before you arrived. Customers buy, employees work, cash comes in. And one Tuesday morning, you are drinking coffee when something feels wrong. Nobody has called you. Business number 2 is running without you. That is the moment the idea becomes real. You hire a stronger manager in business number 1. Now both companies can operate without you being in every room. Profits stay inside the system instead of immediately becoming a new car, a bigger house, or a more expensive lifestyle. Eventually, another owner calls, then another. 2 businesses become 3, 3 become 5, 5 becomes 7. Your first company needed you to answer the phone. Your 7th has employees who have never met you. And now something even stranger starts happening. At the beginning, you used your money to build businesses. Now the businesses are helping you buy businesses. Cash from one company helps strengthen the group. Another company pays down acquisition debt. A third builds reserves. You stop seeing each business as a separate trophy. You see them as engines connected to the same machine. One engine creates cash. That cash gives you options. Buy another company. Invest in the best one. Pay down debt. Walk away from a bad deal. The numbers get bigger, but your daily job gets smaller. At $10 million of combined business value, you are no longer the person opening the doors in the morning. You spend your time deciding where capital goes next. Then you make the mistake almost every fast-growing owner eventually thinks he is too smart to make. You start believing the machine cannot lose. A company comes up for sale. It is bigger than anything you have bought before. The numbers look incredible. You want it. Your team is cautious. You buy it anyway. For a few months, you look like a genius. Then its largest customer leaves, revenue drops, margins collapse. The debt used to buy the company does not disappear with the customer. Then another business has a bad quarter. Then borrowing gets more expensive. For years, every problem was solved by growth. Now growth is the problem. For the first time, the question is not what do we buy next? It is what do we sell to survive? You sell one of the companies you loved. You take the loss. You stop acquiring. You cut debt. The empire gets smaller, but it survives. And that failure teaches you more than the previous 10 years of winning. Scale does not protect you from bad decisions. It makes bad decisions larger. When you start buying again, you are different. You no longer chase every deal. You no longer need to own every share. Sometimes you buy 70%, sometimes 60, sometimes 51. Managers keep ownership. Partners bring capital. You keep enough control to decide where the business goes. For years, you thought becoming wealthy meant owning more and more of everything. Now you understand the opposite. You do not always need to own everything to control something enormous. The group crosses $100 million in value. There are CEOs running companies you own. Hundreds of employees make decisions every day without asking you. Years ago, one angry customer could ruin your evening. Now, one decision in a boardroom can move millions of dollars. You are not an operator anymore. You are an allocator. Then, the compounding becomes difficult to see from the outside. 7 companies become 10. 10 become 14. Some are sold, others are merged, new ones are bought. Eventually, the structure underneath you holds stakes in 20 businesses: manufacturing, services, software, logistics, property connected to the operations. Thousands of people go to work inside companies you may visit only a few times a year. Together, the businesses are valued at roughly $500 million. 20 years ago, you were trying to make your first $100 after work. Now, you control a $500 million group, but this is where the giant number becomes misleading. You do not have $500 million in your bank account. The companies have debt. Other investors own pieces. The value moves when profits move. If the group is worth $500 million, a debt might account for roughly $180 million. Outside owners may hold part of the remaining equity. Your effective stake might be worth around $200 million. Still extraordinary, but completely different from having $500 million in cash. You never built a $500 million bank account. You built a structure that controls $500 million of businesses. Look back at where you started. At level 1, you sold your time. Then you owned one business, but the business still owned your time. Then you built a company above it. You bought the second business, then the third. Eventually, the companies started helping finance the next companies. You hired people who were better at operating them than you were. You nearly destroyed the entire thing by growing too fast. You survived. And somewhere along the way, your job changed from doing the work to deciding what should be owned. On your desk now is not a customer invoice. It is an ownership chart. At the top is you. Below you is one holding company. Below that are 20 businesses. Below them are thousands of employees, customers, buildings, contracts, machines, and decisions happening every day. You started by trying to make more money. What changed everything was learning how to own. You do not need to personally do all the work. You do not need to personally hold all the cash. And at the highest level, you do not even need to own every share. You need to own enough of the system that owns the assets. That is how $0 becomes control of $500 million.